So good afternoon, everyone. My name is Tara Kirkpatrick, and I'm the Manager of Economic Development at the United Counties of Stormont, Dundas, and Glengarry. We're very excited today to be able to host this conversation with the BDC. So we're joined today by BDC's Chief Economist Pierre Cléroux. Mr. Cléroux leads a team of experts who analyze economic data to identify business and sector trends that impact Canadian entrepreneurs. He's a seasoned speaker who regularly travels across the country to help business owners understand the risks and opportunities presented by the economic environment. Monsieur Cléroux is also responsible for providing economic analysis and advice to the bank's senior management team, and he supervises all marketing and industry research activities. Monsieur Cléroux, thank you so much for joining us today. And we are also joined by Rose D'Amato, who is a senior account manager for BDC, as well as her teammate, Catherine Letournier-Guizet, who is the manager of the Business Center for BDC. So I'm very excited to have these panelists join us today, and I'm going to start by turning it over to Rose and Catherine for a few minutes, just to give us a modest overview of what the BDC does to help businesses.
So Catherine here, and I'll just say really a few words and let Rose continue. So my name is Catherine Letournier-Guizet, and Tara, you did a good job saying my name. I know it's not an easy one. Thank you. And so I'm the manager of the Ottawa office, which covers Eastern Ontario, and obviously including Ottawa as well. So BDC is the bank for Canadian entrepreneurs, and we support them through good times and bad times. So that's all I'm going to say today. Rose, I'll pass it on to you to say a few words.
Hi, my name's Rose D'Amato. I'm with the BDC. My office is in Cornwall on 208 Pitt Street. And Tara asked me to talk a little bit about our advisory group because it's something that is less known to most people that know BDC. So I'm going to share my screen. I've got a couple of slides and just talk a little bit about advisory for a few minutes, and then I'll hand the mic back to Tara so she can introduce our featured speaker, Mr. Pierre Cléroux. So here's a quick overview of what BDC does. If you're not sure, we do financing, capital, and advisory. I won't talk about financing or capital today. If you need more information, please give me a call. What I really wanted to do is talk a little bit about our advisory group and give you a quick overview about what we do in advisory. So why advisory? Well, as a development bank, we go beyond giving financing to give entrepreneurs practical advice to help them run a better, more profitable business, because we know that entrepreneurs need more than money just to succeed. We've been doing advisory services for about 30 years. And BDC advisory services help entrepreneurs work smarter. Our goal is to help you adopt and incorporate best practices to meet your business challenges and to remain competitive. So there's a couple of areas that we do, or what our goal is. This slide puts it in a nutshell. But first, we want to accelerate
Rose,
your business.
I'm sorry to interrupt you. I just wanted to advise you that your screen has not been shared. So you may have to change your settings there. We can only see your face.
Oh, okay. That's too bad. I'm not sure.
There we go.
Is that working?
That's better. Thank you.
Okay, so I'll just continue on because this is the screen that I'm at right now. So BDC advisory services, as I said, helps entrepreneurs work smarter. First, we want to accelerate your business growth. We work on increasing your sales by focusing on sales and marketing, both traditional and digital, as well as innovation, so product development. Secondly, we also want your business to grow, be more agile and more efficient, so we can help you with improving your operations by streamlining processes also implementing lean manufacture and selecting the right equipment or technology that you need. We also help you build organizational capabilities to manage your business effectively. So we offer advisory services in areas such as strategic planning, financial management, organizational design, and as well as HR management. And we will also have advisory services to find new markets to keep your business growing, including international expansion. And finally, we also help you address more specific needs like optimizing your online sales or helping you attain various food certifications or ISO certifications. So in a nutshell, we do a lot of things to help our business owners help their businesses become, as we said, increase your sales, improve productivity, etc. So if you have any questions about our advisory services, I'd be happy to answer any questions and see if there's some way that BDC can support your business. So that's all I had to say about our advisory services. Here's our contact information for Catherine and I. I'll just leave it up on the screen for a couple of minutes. But now I'm going to hand the mic over to Tara, and she can do the introductions of Mr. Pierre Cléroux, our featured speaker for today.
Rose, thank you so much for your presentation, and Catherine as well for your introduction. It's exciting to be able to showcase a little bit about what our business partners are doing to help local business within the region. It's a shared topic that all of our agencies work on. So here at SDG Counties and Economic Development, we're here to support businesses, and often that is helping to work as their concierge to bring in the services they might need, and sometimes those services involve the BDC. I'm excited right now to introduce, as mentioned, Pierre Cléroux. He is the Vice President of Research and the Chief Economist of Business at the Development Bank of Canada, the BDC. Monsieur Cléroux, without taking away any more time, I would love to offer you the floor. Thank you so much.
Thank you, Tara. Good afternoon, everybody. I'm just going to share my screen. I think you probably see my screen by now.
Yes.
Perfect. So my presentation has two parts. First, I'm going to talk about the Canadian and also the Ontario economy. What should we expect for the next 12 to 24 months? And the second part of the presentation is about trends that are changing our business environment. So first, let's look at where we are in terms of the economy. This is the fluctuation of the GDP or the economic activities per quarter. So as you can see, the second quarter of 2020, when we started the pandemic, was very negative. The economy rebounded during the third quarter of 2020. And in 2021, well, we had a good start, but we had a decline in the second quarter, which was during the third wave. Some part of the country had a strong third wave, and that really slowed down the economy. But during the summer, the last quarter that we have on the screen, well, the economy rebounded again. So in terms of jobs, we have recuperated all the jobs that we lost during the first wave. We lost 3 million jobs in Canada. Now we are back to the pre-crisis level. Actually, we have a little bit more jobs in Canada than before February 2020. What is interesting on this graph, it shows you the impact of each wave. During the first wave, we lost 3 million jobs. We recuperated most of these jobs. Then we had the second wave, and we lost again 250,000 jobs. During the third wave, we lost about 150,000 jobs. And now we are at the end of the fourth wave. And as you can see from the graph, we haven't lost jobs. So the impact of the virus on the economy is really slowing down. And now we're talking about this new variant, which will be the fifth wave. And we don't expect that this is going to slow down the economy. Why is that? Well, the main reason is because our level of vaccination is much higher now than before. 76% of all Canadians has been vaccinated so far, which is actually the best level of any developed economies in the world, much bigger than the US, for example. So this is really helpful to protect people, Canadians, and it's also helping the economy not being affected by COVID-19. So our expectation for next year is growth of 4.3% for this year and 3.5% for Canada for next year, which is quite significant. It's higher than what we have seen before 2020. So we are expecting a solid growth for 2022 as we move away from the pandemic. Doesn't mean that we don't have any more issues. We have some challenges like shortage of labor and also some supply chain disruption, but in general, the economy is going to have solid growth. Why is that? What is going to be driving growth? Well, the first and most important factor is going to be consumers. Canadians' wealth has been increasing, which is unusual during a recession. But there's three reasons for that. Government program has really helped Canadians to increase their disposable income. The housing market has been performing very well, as you know, and for that reason, if you own a house, you're probably richer today than 12 months ago. And also the stock market has been performing well. So investment has been performing well for Canadians. So Canadians in total are worth, their wealth has been increasing. Not only we're richer, but we saved a lot of money last year. Every year, Canadians save about $18 billion. But last year, we saved more than $200 billion. That's a huge amount of money, which is not exceptional because during every recession, consumers tend to save money. You would, for example, postpone buying a new car during a slowdown in the economy. But on top of it, of course, as you remember, there was a lot of restriction on our economy. So restaurants were closed for a while. We couldn't travel. So that's a good time to save, and that's exactly what Canadians did. Why I'm showing you this is because it's important for consumption. When people have money in their pocket and in their bank account, well, they spend more. And that's exactly what we are seeing now. Consumptions of goods in Canada is almost 5% higher than before the crisis. So part of it has been saved, part of it has been spent. And that's going to be the main driver of the growth in 2022 and 2023. Consumers have money, they have more and more confidence in the economy, and they're going to spend money, which is going to drive the economy. On the business side, business investment are improving, but they're not back to the pre-crisis level. Our latest research on that shows that business investment should be higher in 2022. Business confidence is much better than it used to be. Business investment intentions are back to the pre-crisis level. So we are expecting to see more investment in 2022. Finally, the last driver of the economy is our export. After a huge decline during the pandemic, our export are back to the pre-crisis level. The US economy is performing very well. So the demand for Canadian products and Canadian services are high. And that's explaining why export is going to contribute to growth. We have also some worries, and what the main one is probably the inflation. You hear on the news that inflation is high. This graph is confirming this. The inflation right now it's at 4.7%, much higher than what used to be before the pandemic, around 2%. During the pandemic, the inflation went down because of at the beginning of the pandemic, the demand for products and services really dropped, so that's made price going down. But since the demand is strong and inflation is also significant, should we be worried about this? Well, we believe that most of the inflation is temporary, and because there's a lot of unbalance in the economy, and a good example of that is the price of lumber. The housing market has been good. People have been renovating their house because during the pandemic. So the demand for lumber has been very strong. And as you can see, the price of lumber has been increasing very significantly. I don't know if you have bought some lumber lately or tried to rebuild your deck or make some renovation, you probably realize that the price of lumber has been increasing just because the demand exploded and it took some time before the supply adjusted to the demand. So as you can see from this graph, the price is much more reasonable now. It's still higher than before the crisis, mostly because of the flood in BC. So BC is producing a lot of wood for a lot of lumber for North America. So the price of lumber should go back to the pre-crisis level. And that's a good example of what's happening in the economy. Because the demand for some products has been really increasing, well, the price has been increasing. So we believe that the inflation is going to really slow down in 2022 as we move away from the pandemic and we move away from this change of consumer behavior. So we don't expect inflation to stay very high. We believe that it's a temporary phenomena, and we don't believe it's going to have an impact on interest rate. The Bank of Canada said they're going to be a little bit more tolerant with inflation because of the pandemic, because of the unique situation we are in. So interest rates are low. They will increase in 2022 because the Canadian economy would go back to normal. So as a result, there's no need to keep interest rate low to stimulate the economy. So you should expect interest rate to start to increase in the spring of 2022. Interest rate will increase slowly because the Bank of Canada doesn't want to slow down the economy, but it's going to move up slowly for the next few years until we reach what we call the neutral rate, which is an interest rate that doesn't stimulate the economy, just because the economy will be strong enough not to need stimulation. So this is how we see interest rates. So the Ontario economic situation now, but in terms of jobs, as you can see, Ontario is performing a little bit better than the Canadian average. A lot of sectors are back to the pre-crisis level. Here you see we compare the current level of job compared to February 2020. In general, the Ontario economy is at 102%. So there's about 100,000 more jobs today in Ontario than before the crisis. Some sectors are performing extremely well. For example, the professional services, there's about 100,000 more jobs in that sector in Ontario than before the crisis. Manufacturing has about 12,000 more jobs. But if you look at the bottom of the graph, you can see that some sectors are more affected. That's the case of accommodation and food services, where we're still missing about 50,000 jobs. As you know, there was a lot of restrictions on these sectors. There's also restriction on tourism. International tourists are not back to Canada and Ontario, so that's also having a negative impact on this sector. So it's going to take more time before this sector is going back to normal, probably not before the end of 2022. But in general, the situation is actually in a better, we have more jobs than before the pandemic. The housing market, as you know, has been performing very well. Here you have the price increase, which is kind of unique. You know, we didn't expect that. Usually when you have a recession, the housing market is slowing down, but the interest rate went down and people recuperated their job very quickly. So the housing demand has been strong and housing prices has been moving up. You know, in Ottawa, for example, the average price is 63% higher than before the crisis. In Toronto, it's 30%. So the housing market has been performing well, and as a result, the housing starts in Ontario is performing very well. It's way above what we have seen before the crisis. So, which is good, creating a lot of jobs in the construction industry. The manufacturing sector is performing relatively well. You can see that the drop was very significant at the beginning of the pandemic, but the rebound was also very quick. Now it's performing quite well. It's at the exception of auto manufacturing. There's a strong demand for cars in North America, but the problem, we have a supply chain issue here. There's a shortage of semiconductor, which is really slowing down the production and also the export of our cars. In other manufacturing sector, they are doing very well. Food manufacturing is up, chemical is up, and most actually manufacturing subsectors are doing quite well. The only exception is auto, and automotive is going to rebound in 2022 as these supply chain issues are solved. For example, if we look at the auto export, we can see that we did very well after the pandemic, after the drop during the pandemic. But since then, because of the supply chain issue, the level of export has been slowing down. It should solve itself in 2022. So in summary, the Ontario and the Canadian economies, they're both going to have solid growth in 2022. We still have some challenges. Well, COVID-19 is not over yet. We're doing much better, but it's not over yet, as we see We're going to have a fifth wave with the new variant. There's a shortage of labor. I'm going to talk about this a bit more. And there's still supply chain issues. The automotive sector is a very good example of that. But that should really improve in 2022 as we move away from these unbalanced sectors that we have been seeing. So 2022 is going to be a solid year for the Ontario and for the Canadian economy. 4 trends now that is changing our business environment. The first one is, and the most important one, is the labor shortage. You probably have difficulties to recruit people. 55% of Canadian business have difficulties to recruit. Another 25% have difficulties to retain their employees. So why is that? Why is this? The situation was also significant or important before the pandemic. We got a break over the last 18 months, but now the situation is back. It's difficult to recruit people. Well, the most important reason is the fact that we are aging as a population. The median age in 1971 was only 26. Now we are over 40 years old. That's the median age. This 20% of Canadians now are over 65. So there's a lot of baby boomers who are leaving the workplace to retire. So this phenomena started about 5 years ago, and it's accelerating now as more and more Canadians are over 65. Actually, a lot of people retired during the pandemic. What does it mean? Well, it means that our labor pool, the pool of workers, is actually not growing as much as in the past. For example, between the year 2000 and 2010, our pool of workers, the number of Canadians between 15 and 64, basically people who have the age of working, increased by 12.5%. Last decade, well, the growth was much less at 6.6%. And in the next decade, the growth is going to be only at 3.8%, because a lot of people are leaving the workplace to retire, and there's not a lot of young Canadians joining the workforce. The situation is going to improve in the next decade, in 2030. That's far away. The most important decade for us is the next one, and the situation is not going to improve much. As you can see, the growth of the population, the pool of workers, is not increasing as much as in the past. So as a result, the labor demand, the number of jobs in the Canadian economy, is increasing more rapidly than the labor supply. So that's the reason why it's so difficult to recruit people, because we have a gap between the demand and the supply. Well, there's some good news. The unemployment rate is going down, and more people are able to find a place to work, even if they don't have a lot of skills, or maybe they were not able to find a job before. So there's a good news for Canadians. There's a good news for the government as well, because the unemployment rate is low. The challenge is for businesses who are looking for people to grow their business. And the pandemic made things worse, because the level of immigration dropped by half during the pandemic because of the restriction. And so that's a huge problem. When you have a shortage of labor, you realize that the number of immigrants is not coming as much as in the past. It's going to be much better in 2022, but we lost probably 400,000 people not coming to Canada because of the COVID restriction. So that made the situation worse. So what can we do? Well, there's no easy solution, unfortunately. I would love to tell you, well, you should do this, but actually there's a number of strategies that a company can adopt depending on your business model, the sector you're in. We did a research that you can have access to the full report for free at bdc.ca. This is the summary of the best strategy, and actually the best one is the number one. Investing in technology and automation to replace some tasks in your business, it's actually the best strategy to grow your business. Our research is showing that people who are investing in technology, they have continued to grow in terms of revenue and also profit. Second solution is to use a more formal hiring process. We realize in our research that 75% of business owners, they are still looking toward the networks to hire. Well, maybe that was a solution in the past, but now, as everybody is looking for talent, it's not the right way to do it. You really have to go on social media to advertise your job that you're looking for. You have to make much more an effort. You have to sell your business as a good employer because everybody is looking for talent. Also, the third one is important to offer a competitive compensation package, which include not only salary, but also benefits, training, flexibility. A lot of Canadians are looking for more flexible work week. So if you are able to offer that, that's really increasing your chance to hire and retain your people. And finally, it's important to look differently at the job market. We all want people who have been working for 10 years, but these people are very difficult to recruit right now. So a lot more businesses are recruiting young people with no experience. The unemployment rate is low, but actually the unemployment rate is still higher for younger people. It's still higher for immigrants. So there's some subgroup of the population that have more difficulties to find a job. And they are talented and experienced. So it's important to look differently at the job market. The second trend that we see is the e-commerce. E-commerce exploded during the pandemic. It tripled at one point. Now it's still twice as much as what it was before the pandemic. So it's like Christmas every month now in terms of e-commerce. Well, the pandemic has really changed the habit. Many consumers decided to buy online to avoid to go to retail stores, and they like the habit, so they are keeping it. So it's important for business to increase their presence online because that's really where consumers are going now. The third trend is remote work. At the beginning of the pandemic, 40% of Canadians work from home. Now we're down to 25%. But we believe that this trend is going to stay very high, much higher than before the pandemic. We believe that at the end, when all this is done and COVID is behind us, a lot of businesses are going to use the hybrid model, some flexible time, sometime at home and sometime on the workplace. And the reason why we believe that is the perception on the business side has really changed. 74% of Canadian businesses are saying that they are going to use some remote work after this crisis. This number is much higher than what we have seen before the pandemic. What changed? Well, people are now they try it during the pandemic, so they have invested in technology to allow the employees to do it. They realize that for many jobs, people are as efficient from home than they are from their workplace. And also Canadians want it. They like it. A lot of Canadians said that it's going to be an important factor. The ability to work some days a week from home is going to be a very important factor before they accept a new job. So on both sides, they realize that it's a good idea. So we believe that remote work is going to stay with us after this crisis. Finally, the last trend I want to talk about is the environment. We have been talking about the environment for a while, but the next decade is going to be, I believe, the decade of the environment. As you know, Canada has commit themselves to reduce our carbon footprint. We're not the only country. There's actually almost 200 countries around the world who have signed this agreement to reduce our carbon footprint by the year 2030 and also the year 2050. So in the next decade, we believe there's going to be a lot of pressure on business to reduce their carbon footprint. We believe the price of carbon is going to increase, which is if you don't do anything as a business, you're going to pay more. So it's going to increase your cost. Also, we're going to see more pressure from consumers, from investors to be more green. So the first reason why we should do it is because I think everybody agree that we should reduce our impact on our planet. But there's also other reasons. I think the pressure is going to be on business in the next decade. So in conclusion, the economy is going to have solid growth in 2022 and 2023. The most important factor to support this growth is going to be consumers. Canadians' wealth has been increasing. They have saved a lot of money over the last 18 months. So they're going to spend it in the next 2 years. And this is going to stimulate the growth of the Canadian economy. But our business environment has been changing. It requires a lot of technology adoption to increase our presence online for remote work and also to face labor shortage. And finally, like I said, I think the next decade is going to be the decade of the environment. So it's time for business to think about how they're going to reduce their footprint on the planet. So I'm going to stop here. I'll welcome your questions. If you have any questions, I would be happy to take them.
Pierre, thank you so much for your wonderful presentation. I think you've identified a lot of opportunities for our business sector in both, across the counties and across other regions that are listening today. We understand that environmental businesses in particular have a lot of opportunity. Are there any other specific niche markets that you project will see growth, maybe new and emerging markets? I'm sure that everybody on this call today will understand that biotech companies and those dealing with viruses and those dealing with vaccines definitely had an unprecedented growth. But are there any other niche markets that you would see emerging over the next year or opportunities to emerge?
Two things. First, the US economy is performing very well. So exporters or people who want to export are going to benefit from a very good market in the next few years. Not only the economy is performing well, but the new president, Mr. Biden, has signed a new program on infrastructure. They're going to spend not billions, but trillions of dollars on infrastructure. And this is going to give a lot of opportunities for Canadian businesses. The second, the point or the sector that is growing the most right now is technology. Businesses who are selling technology or helping other businesses to adopt technology, they are performing very well, growth, and we're expecting that this is just going to accelerate. Actually, the only challenge for those people is going to recruit people, because everybody's looking for tech people. But this is going to be the sector that is going to grow the most in the next 5 years.
Thank you very much for that. And we have a first chat question. So I bring this from Martine Thurlergy. She wants to know, what is the impact of labor shortage to growth?
It's actually limiting growth. We see it, many businesses right now, they refuse new clients or they refuse new contract because they just don't have the manpower. So it's limiting growth of businesses, and by rebound, it's limiting growth of the economy. There's an economic equation that says that the long-term economic growth depends on the supply of labor and productivity. So when we have a shortage of labor, right now, there's actually 1 million vacant jobs in Canada. That's something that we never saw before. So this has a potential to limit growth of the economy. So in order to prevent that, we have to increase our efficiency, our productivity, and adopt more technologies that will allow us to do that.
Wonderful. Pierre, our next question is actually from Rose D'Amato. Do you see any opportunities for entrepreneurs arising from the quest to reduce their carbon footprint?
Yes, I do, because a lot of businesses, they want to do something, they're not sure what to do. So there's a lot of needs to help Canadian businesses to reduce their footprint. First, the advisory, also how to calculate your footprint. What is the best strategies? We have produced a report at BDC that you can find on our website, the different steps that you can take to reduce your footprint. But even if you know what to do, you have to do it. And in terms of doing it, I think there's going to be quite an industry developed around this about how to help companies to reduce their footprint, from reducing waste, become more efficient, reducing your cost of energy or the use of energy, installing solar panel. There's a lot of different things. There's a lot of different opportunities related to this change that we're going to have.
And Pierre, I know that in this year's climate, there's been, as mentioned, over 400,000 400,000 fewer immigrants came to Canada during the pandemic. I know that there's going to likely be attempts to get to the pre-pandemic standards, but do you think that there's going to be an increase in immigration?
I think there will be an increase. The Canadian government has committed himself to double the level of immigration in the next 3 years. So this plan was derailed by the pandemic, but now that we are almost done, we're going to accelerate immigration. And this is going to actually help businesses to get the workers they need. Also, this is going to continue to stimulate the housing market because immigration is a big part of the demand for housing. So this is another sector that is going to continue to do very well. As we accept more immigration, we'll need more lodging for these people.
And there has been some conversation about whether or not the housing market is inflated at this point. Do you think that there's likely to be any kind of housing crash as these prices continue to rise on housing across Canada?
I don't think it's going to be a crash. I don't think the increase will continue at this pace. I think it's going to, the price are increasing too fast right now. They're increasing much faster than our income, which is not a good news. Low interest rate, strong demand. The pandemic has made people wanted bigger houses. And now immigration is going to stimulate this demand. So we believe the housing market will continue to do well. We hope that prices will not increase as much because it's becoming to be difficult to afford a house in many parts of the country. So, but the housing market it's not going to slow down. It's going to continue to be good.
And we have a further question from Catherine Le Tournier-Guizet. She comments that a lot of food and beverage companies have benefited from the pandemic. Do you see that trend continuing?
Yes, I think so. The demand for food around the world is growing as the world economy is growing, and there's actually more countries who have a middle class which can afford to buy more quality food, and that's exactly what we produce in Canada. So the demand for food in Canada has been growing over the last decade, and this is a trend that we believe is going to continue. We provide a lot of food to the world, and we provide a lot of quality food that's a lot of people around the world want. So that's trend is going to continue.
Wonderful. And this one is coming from Martine Thorelet-Guy. She says, you mentioned that supply and demand being a cause for inflation. What is your view on monetary policy and inflation?
There's two causes basically for inflation right now. There's a strong demand. I show you numbers that consumers are rich and they are spending more, and they're spending more on some item like wood. Lumber was a good example, but there's also electronics. There's also a lot of other goods that are benefiting from that. This combined with the supply chain issue made prices to increase. We believe that it's going to go back to normal in 2022. Our biggest worry is we are starting to see that salaries are increasing in Canada, which will be a more permanent factor for inflation. So that's our biggest worry. That's something we really watch for. In terms of the monetary policy, we believe interest rate is going to increase. Not so much because inflation is high, but because the economy is back to the pre-crisis level, except maybe in accommodation and food services. So there's no need to keep interest rate very low to stimulate the economy. Basically, when the Bank of Canada reduced interest rate at the beginning of this pandemic, it was to stimulate the economy. And they did in housing for sure. And housing means a lot of construction workers, etc., which is good. But we believe the Bank of Canada is going to start increase interest rate slowly, gradually. But I think it's going to increase from what it is now, 0.25, that's a prime rate, to probably around 2%. It's going to take probably 2 or 3 years to do that. But they want to increase interest rate to what we call a neutral rate. Neutral rate means that interest rates are not having stimulative impact on the economy and doesn't have a negative impact either. In Canada, it's around 2%. So you should expect that the interest rate will start to increase, probably spring or summer 2022. They will increase it slowly, so probably from 0.25 to 0.5, and after that 0.75. And the following year, 2023, they will continue this trend.
Pierre, many of our businesses and our government partners are currently working on their budgets. We understand that cost of living allowances and inflation are on everybody's lists of things to consider. You'd mentioned that you expect the 4.7% estimated inflation to go down. Where do you think it's going to hit in 6 months from now?
Our forecast for 2022 is around 3%. So will be lower than what it is now, higher than what we used to see in Canada, around 2%. Also in your budget, you should take into consideration that salaries are increasing. And it's in this context of the difficulty of hiring people. Often when you need somebody, a new person, you will probably have to pay more than what you used to. So that's probably something you should budget for.
And as mentioned, I think we're all going to be looking up your guidebook on bdc.ca on some of these tips to hire, because of course it is the #1 note of feedback that we're getting from our local companies is how do we hire? How do we steal them from somebody else? How do we get them through our door? And they are getting more creative. I know we have employers considering housing, for instance, as one of the options, because with the housing market the way it is, it's becoming increasingly challenging not only to recruit new employees, but to find a place for them to live, with both the housing and short-term leases. Also, I mean, apartments in many areas across the province are almost impossible to find.
That's a very good idea to do that. We see different companies doing different, scenario around across the country. What we see much more as well is to hire young people with no experience, but to train them internally. Also, what we see more and more is when you need somebody with skills, you will look inside your company to somebody who is more junior, doesn't have the skill, and you train them. So there's a number of our solutions. Unfortunately, there's no easy solution that will solve everything. It is a number of strategies that you can use depending of your business model, your sector.
Perfect. Thank you so much, Pierre. And I'll just ask those listening, does anyone else have any questions that they would like to put into the chat box? And if not, I will note that this presentation is being recorded and it's going to be released on the SDG County's social media pages on Facebook and YouTube, and we'll also be posting it on sdgcounties.ca. We'll make sure to post the links for the BDC reports that are listed, so through bdc.ca. And if anyone has any questions that they want to follow up on, they can reach me at tkirkpatrick@sdgcounties.ca. And I'm happy to coordinate and link you back through to Catherine and Rose and their teams at the BDC so that they can also further answer some of these questions. I know that, Pierre, your conversation has definitely got a lot of minds turning today, and we're excited by the projections leading to positive growth in our economy, which is good for everyone and all of our businesses. And hopefully these trends continue and we find some, as you say, creative solutions for the challenges that our businesses are facing, particularly around employment.
Well, thank you. It was a great discussion. Thank you.
Thank you all. And I think that's it for the day. So Pierre, thank you so much for attending with us. And Rose and Catherine, you as well. We're excited to host you again at one day if you're open to answering some further questions. And I will send an invitation off to those joining to please follow us on social media and to watch for the links, and we will send those out shortly. Thank you, everyone.
Thank you. Bye-bye.
Bye.
Thank you. Bye-bye.